Good evening, everyone. You can see my screen, and today we'll be discussing about the stocks rather than discussing about index because you can see in index there's a lot of volatility, like 200, 300 points movement has happened last month every day, mostly weekdays and weekends. It was absolutely unbearable for option sellers because anything would happen. The market can go down 800, 700 points. Again, it can move up 800, 700 points, gap up. So anything would be happening last month. So we have seen a lot of people taking losses in index options. There was no chance for retailers to play or to earn in this market. So I would suggest don't trade in options for at least 1 month. Try to play in stock options or stocks specifically. Uh, Now, if you see, I have selected, I've checked top losers, and I've also selected 1 week returns. And if you see, there is an option for 1 month returns as well. So I have I have selected this, and if you see 1 month return, Ola Electric, Adani Power, all these 1 month returns, Lloyd's Metal, all these stocks are there. But instead of looking at 1 month return positive, if you look into 1 month negative, so see the thing is, we are looking for stocks which has already been beaten down. So because if it's already beaten down, there is a low probability that it will go down from here as well. If you remember, a couple of months ago, in IT stocks were hammered. So Infosys was somewhere around 1650, 1670. From there, it went till 1300 or 1250 levels. Again, it was in a range bound trade for a couple of weeks or 1 month's time. Again, it has been yesterday, it was 6 7% down. So if you see returns for Infosys or HCL or these stocks, so the returns have been, if you see 1 week returns 12% down, 1 month is 9.5%. If you see 3 months, it is 30%. So if you see 30% stock like Infosys, which has given a profit of 8,500 crore in this quarter, plus they have announced 25 rupees dividend. Now same thing goes to Abbott. Abbott is a very good company, but 3 months return has been 9%. Sorry, 9% has been the negative returns, and for this week it's 2.5% down. So if you select from these good quality stocks, I wouldn't recommend Reliance because Reliance is a very big heavyweight and it doesn't move as much. Probably that is the reason I would request, or I would say no point in trading in Reliance. Instead of that, choose other stocks which have been beaten down and which has the potential to go up. So if you select, see HCL Tech also. So HCL Tech overall the returns, like its negative returns for say 3 months is 29%. So from here on, the bottom ups, it can be a bottom up story. It can move up from here. So try to accumulate at these levels. These stocks, good 3 4 stocks. Even Sun Pharma, if you see Sun Pharma, it's like 4% down for last 6 months, or 3 months. It's hardly negative, 1% negative. So it's not that. But if you see 3 months negative stocks, see Hexaware, then KPIT, all these are all IT related stocks. LTI Mindtree, Latent View. So if you see Infosys was there, but TCS is also there, Zensar is there, was all IT related stocks are there. And because of that AI news, these stocks have been beaten down. They have heavy selling on these stocks. So I would suggest to trade in these stocks because it's already beaten down. So from here on, the downside is very limited. if you see the option chain, suppose if you see the option chain for Infosys for next month, so here you can see 1100 levels can act as a very good support. And also if you see, there is nothing in the money writing in happening on in Infosys till 1100. There is some writing, but below that there is nothing. So even big players are thinking that this is the lowest points. So from here, even if market react anything, these stocks has already been beaten down so badly that there is no room for them to go down from here. Because if you see, if you go to any goods website, or if you see screener, in screener I'll show you Infosys details. See, so the market cap is 4,68,000, which was couple of months ago it was around 650. And if you see book value 229, stock P which is trading at 15 P, intrinsic value. See, this is the most important factor, intrinsic value. The real value, intrinsic value means its real value is 1081. Now it's trading near the level of 1081. I'm sorry. So if you see, it's trading near its intrinsic value. Also if you see, they have quite good reserves, and ROC, ROE is 30, 32%, 40%. Even if you see, the dividend yield will be quite good at these levels. If you buy these levels, 25 rupees dividend has already been announced. See here, the stock was trading around January 1682. From there it went, now it is like 1150. So it's quite down. And because the reason is simply the FIs have been selling this stock. See, the FIs has sold 1.82%. So if you see, the FI holding has changed drastically, or it's been reduced drastically. The DI holding is quite good. And other than that, I do understand it's AI is a problem, but it's not immediate effect. Even the company has said in a couple of conference calls that they are looking into the AI thing, and they will be also implementing or changing things for AI. So AI looking it as a threat is not that good. Now if you see, same thing with TCS. TCS, the stock P is 16.6. The ROC here it's 1777, but the stock price is 2397. Still like 600 points, around 600 points. There is a difference. So intrinsic value and the current stock price. So even if you see, the FI holding has reduced in this TCS stock. And one more thing, that because of that last month, that Nasik issue. So my personal thing is like, I have been tracking this stock for like 3 4 years, and if you see 5 years returns, it's been, see, 5 years it's kind of negative returns, negative returns. So in 2020 it was 1650. Now it is like 23, almost 23 500, 900. So I don't have that much interest in this stock, because it's been sluggish for quite a time. And the net profit for TCS has been like very good. That's not a point. If you see the net profit here, so it's like 11,000, 12,000, 12,000, 11,900, 13,784. It's been constant. The profits has been constant. And because of that, it is quite a good stock to buy, to accumulate. But if you see the holding of the FIs, it's been, the holding of FIs have been reduced quite drastically. And my only concern for this stock is the intrinsic value is 1777 and it's trading at 2397. However, if you see Infosys, it is like the intrinsic value is 1081 and it is currently trading at 1155. So it's like hardly 70 point, 80 point difference. So because of that, I personally like Infosys because intrinsic value is the real value of the company, of the current value. That's the reason I like it. And if you see HCL Tech, if you see HCL Tech, so here also the stock price is trading 1203 and intrinsic value is 1018. So it's trading above like still 200 points difference. The reserves is quite good. The ROC, ROE is 20, 30, that is fine. FI holding has again changed here. So if you look overall, stock PE also is 18. So in these three stocks, I was checking. Now see the ROI, ROCE, ROE, sorry. It's 40%, 32%. HCL we have seen, it's 36, 24 plus the stock P is 18 and Infosys the stock P was 15.4 which is very less. Whichever stock trades below 17, 18, it's attractive actually. And if you see TCS also, what's the stock P is say it's 16.6. And we'll see other stocks like Reliance stock P is 22. Reliance intrinsic value is 833 while it's trading at 1328. Again, these are the things. And now if you look at other stocks, other IT stocks, now here stock P is trading at 39.3 and its current trading at 11851 versus the intrinsic value 971. In this I'm not interested because the promoter holding is 0. FI holding has been changed to 23%. It was like minus 11%. So that's been a very drastic change. And if you look at the stock, it was trading around 1900. Now it is trading at 1151. So it's been quite a big hit. Stock has gone down very drastically. Coforge, and even the net profits, it's hardly any difference. If you see 2024 December, it was 256. December 2025 297. So there's nothing much in this stock. So personally I would not be interested in this stock again because the only thing is stock P is very high plus no promoter holding and FI holding reduced drastically. If you see down, I go over here and FI holding, so it was around about 40-42% December 2024 and from there it has reduced. Now it's directly April 2026, it's directly 23%. Even if you see DIs have sold, so DIs holding has increased from 47 to 52, 54, 56 March, but suddenly DI holding has also reduced. And if you see public have invested heavily in this stock now, so the shift has been changed from FIS DIS to public. So I would say that this is not a worth stock. So looking at all these things, this is my understanding that in this scenario, like couple of months, we should be staying away from the index options futures and looking into stocks which have been hammered down, looking for good quality stocks as I mentioned over here. Infosys, TCS. Even if we check Cyient or anything like that, we'll see. Now the Cyient, its stock is trading at 20p. ROC, ROC, there is nothing good in this. Promoter holding is this. FI is just changed, nothing much. Stock has gone from 11-1200 something to 780, 715, again moved up to 900 and again it's going down. See the net profits. Profits have been quite unusual. It has not increased, it's actually decreased. So if you see 97 and then again 63, well as previously it was quite good. See 400, 477, 341, then it recovered, and this it's like 463 which has gone down. So looking at all these things, I would not suggest this stock. My recommendation is not up for these stocks because the profits have decreased actually. We'll see Persistent Systems. Stock P 38.8, quite high. Intrinsic value 2795, however it's trading 4747. Stock P is quite high. We'll see the profits. Now here it is interesting. If we see the net profits, 300, 350, 340, 400, 690, 920, 1000, 1400, 1800. Now here it's going up. If we see constant basis year on year, the profits have increased every year. So here the picture is quite different, and if you see FI holding has also been constant, they have not sold much. So this is also quite good stock. FI's holding has decreased a bit. It was 24%, it is went from 24 to 22. And DIs have increased their holding from 27% to 30%. So I won't say that this is not a good stock. This is also a good stock, but still the valuation is looking quite high in this, because looking at the stock PE, intrinsic value, right now my interest is only in Infosys because the stock P is 15.4, trading at 15.4. ROCE is 40.32 ROE. Intrinsic value is 1081. 1155 is the current value, which is absolute classic example, which it's like a bottom up story. From here, downside risk is absolutely nothing in this stock. Downside risk is nothing. So that's it from my end, and I would request don't trade in options and futures for a couple of months because it's been quite volatile and not we cannot predict at all. Even if we take hedge positions, there have been a lot of gap ups and gap downs. Because of that, people have been wiped out, and because of that, a lot of losses have been occurred. So that's it. That's from my end. Please do subscribe to my channel. Thank you.